Now let's look at the different types of market. Okay, so the capital market is normally divided in two types: primary market and secondary market. Okay, so whenever we talk about the capital market is basically your stock market. There are two main types of markets in existence. Okay, primary market has IPO and FPO. Now, what is IPO and FPO? And what is the primary market? So primary market is basically when you buy shares directly from the company. Okay, when the company comes out with an issue, when the company comes out with a sale that we want to sell our shares, we want to issue our shares, we say that that you are buying from the primary market. That is, you are buying directly from the company. Okay. Now, what do you mean by IPO and FPO? So IPO, which is initial public offering, basically means that here the company is coming out with an offer to issue shares to public for the first time. Okay, that is, before this, the company did not have its shares listed. This is the first time that they are coming with a listing in the stock market. Whereas FPO means that the company already had its shares in the stock market, and this is a further issue that it is making. Okay, this is a new issue that it is making after the initial issue. So the first issue is called as IPO, and after the first issue, any time when the company issues shares to public or shareholders, we say that this is an FPO. Okay, so the primary market is basically a market where you buy shares directly from the company. Okay, here the opportunities are less. You don't have companies coming up with their shares every now and then. Okay, it happens once in you can say a couple of times in the lifetime of the company, or a few times in the lifetime of the company, because the company does not want to keep issuing shares. It dilutes its valuation in the market. Whereas secondary market, now let's go to secondary market. Now, what is secondary market? So secondary market is basically a market where the company does not issue the shares, but the market already has buyers and sellers in existence. Okay, so now when you normally buy shares in the market, when you generally buy the shares in the market, when you go online, when you buy shares on the from your demat account from your broker, you are actually doing a secondary market transaction. Okay, that is, the company has already issued the shares. The shares are already there in the market, and there are buyers and sellers in the market who are buying and selling shares, existing shares of the company. Okay, so IPO, FPO opportunities are not very, you cannot say that it is available all the time, but the secondary market opportunities in good companies is available all the time. That is, if I today want to buy, say, shares of Reliance being being one of the biggest companies of India, I can buy these shares anytime when the market is open. Okay. Whereas if I want to wait for the company to issue shares, so the company will not keep issuing its shares every year or every 2 years. Okay, that will only happen when company comes up with a very big project, or company really needs a lot of money. Okay, or it enters into some new business. That is when you will see an IPO or a FPO happening. Okay, so this is the entire capital market structure which is in existence in India, or for that matter anywhere in the world.